Home prices in the Reno-Sparks area are not dropping, even though everything says they should. So, what gives? In this market update, we're breaking down the March numbers and the trends that explain why this market refuses to follow the script and what it means for selling or buying a home this spring. You don't want to miss this. Let's go.
Assist to sell way smarter.
Hello, everybody, and welcome back to another Reno-Sparks Real Estate Market Update show. This time for March 2026. Now, before we get started, a couple items to make note of. Number one, if you could do me a favor and hit that like and subscribe button below, I'd certainly appreciate it. The stats and trends are directly out of the MLS and cover the Reno-Sparks area only, include single-family residential properties, houses, townhomes, condos. It does not include lots of land and commercial and multifamily apartments, etc. Now, most of these charts go back about 10 years, back to 2016. And as you can see on the charts up here, we'll have these yellow boxes, which will have the main data point, as well as what the data was compared to this time last year, the same month last year, in this case, February of 2025, and the difference between the two. Now, the number one chart we always look at, the first one is mortgage rates, why it has the biggest influence on the overall market. Roughly 80% of home buyers use a mortgage to purchase a property. So obviously the higher interest rates go, the more expensive loans become, the lower interest rates fall, the more affordable house payments become. So that puts pressure on prices and sales and so on. Right now we're sitting at 6.1%, which is down 11.5% from this time last year. We're at 6.8%. And as you can see, we're trending in the right direction, but I wouldn't expect interest rates to move a whole lot from here. You might see them dip into the high fives, but I expect them to be around 6 to 6.5 for the remainder of this year. Now, the median home price is $549,950. Now, keep in mind, this is for Reno and Sparks combined. So what I want to point out on this chart is this bracket that you can see forming here. We've kind of bounced up above 560, then we pull back depending on the time of year. Right now, the estimated mortgage payment on a 30-year fix for the median price home is $3,839, which is actually down 4.4% from this time last year. We're sitting at $4,017. So certainly headed in the right direction in terms of affordability. Speaking of affordability, let's take a look at the affordability index. Now, what you're looking at in this box up here is 64. That's a percentage of the median price home, a median household income earner can afford. So you want to see this number much higher. You'd love to see it above 80 or 90. Certainly down below, we'd like to see it, but up 18.5% from this time last year, only at 54%. Now let's take a look at new listings. These are people that said, yep, let's put my home on the market in the month of February, 456, which is down 15.2% from this time last year. We had 538. Now let's look at new listings by price. Now this chart's a little different. We have prices along the bottom. And of course, we have the number of listings on the left side here. The price range breaks from 100 to 2, 2 to 3, 3 to 400,000, 4 to 500,000, 5 to 600,000, and so on. So as you can see, the majority of new listings on the market are coming on between 4 and 5 and 600, 650 range, give or take, is where the majority of listings are coming on the market. Let's look at active inventory. Now, new is just people that listed in February. Active is just homes that are on the market. 873, which is down 19.6% from this time last year. We had 1,086. So again, much lower than we like to see. Now, active by price, most of your inventory is coming on between 5 and 6, 6 to 7, and 750 to $1 million. Now let's take a look at the sold properties. These are homes that sold in the month of February. 383, which is down 4% from 399 last year. Now the sales are holding strong. It's the inventory. It's a number of homes on the market, both new and standing, that we're starting to see some challenges in, and we're not seeing that inventory hit the market. Now, let's look at closed by price, where we have most of your sales happen between 4 and 500,000 and 5 and 6. When you start dropping below that, the sales really start to fall. And so you can see here, if we look at active by price, you can see a whole bunch of active listings up here. But if I go over to the sold by price, you can see the difference in the number of sales. So what we're starting to see is a lot of these price ranges, a lot of the active inventory that's out there is in this upper end price range where the sales really aren't happening. So you're seeing a tighter market down in the 4 to 550, 600, 650, maybe that range. You have a lot less homes on the market are available. Let's look at unsold homes. This is one of those canary in the coal mine charts I like to keep track of. Kind of gives you a pulse on what's happening in the market, because if homes go unsold, this means they were canceled, withdrawn, expired. For one reason or another, they put on the market, they never sold. 85, which is up 23.2% from this time last year, we only had 69. So what's interesting about this is 85 doesn't sound like a big number. It's not. Given the fact that we only have 873 total homes on the market, you've got roughly 10% almost didn't sell. And if you look at new listings, only 456. So 85 would be not bad if you had 12, 14, 1,600 homes on the market. Wouldn't be that big of a deal. Now, of course, those charts I promised you about California migration, one that I found very interesting I want to share with you. This is origin as a percent of destination incomers. So people that move to the area, where did they come from? Bay Area, San Francisco Bay Area, 46.5%. Los Angeles, 15.3%. Sacramento, 9.1. So the top three are all from California. And then we have Seattle, and of course, California again, San Diego, Portland, New York, Chicago, Washington, D.C., Modesto. So the majority of people coming into our area are from California. We actually replaced Vegas as a top destination for California home buyers. And all this means it's not total quantity. It's just the number of home buyers that are searching for homes from California, or searching for homes in Reno from California, has gone up significantly, more so than Las Vegas. And it's one reason I am bullish on the Reno-Sparks real estate market. Lots of migration here from all over the place. Obviously, California, lots of construction, jobs, tech is coming here. And so I don't expect that to slow down anytime soon. I do expect prices to continue to hold where they're at, maybe soften a bit depending on what interest rates do. So what does all this mean? Well, if you're thinking about selling your home coming up soon, it's really a good time, but you have to be price sensitive, because if I go back to this chart and we look at active by price range, you can see a lot of actives up here in the upper end price ranges, but not a lot of sold. So it's very price sensitive. If you're in the 4 to 550, 600, maybe 650 range, really good chance of still moving your home pretty quickly and getting a pretty good price on it. You start getting above, say, 600, 650 and above, things start to slow down a bit, because there's a lot of inventory, a lot of choices for buyers. As far as buyers go, the good news is we're starting to see affordability ease up a bit. We're starting to see a little bit lower interest rates. We're starting to see affordability, as I mentioned before, at, I think it was 64%. So not bad. We're headed in the right direction. But the good news is it's not frantic. You don't have to go out there and take the first house you see. We're not getting 5 and 6, 8 offers on every house. So you've got some time to be patient, to look around. But if you see that value and you see that deal, go for it. If you're thinking of selling your home, you owe it to yourself to check out Assist to Sell. And even if you're buying, we have a great buyer program as well. Both are designed to save you a whole bunch of money. 1.5% total. Compare that to paying 6% or 5% or even more. It's a significant savings. Most of the time, thousands upon thousands of dollars in extra money in your pocket. Full service real estate company. We do absolutely everything. Put your home in a multiple listing service. It's on every major website portal, including Zillow and Redfin and Homes.com and Realtor.com and all the local websites. We do absolutely everything. If you're thinking of selling, give us a call. If we can be of any assistance, let us know. If you want a quick valuation of your home, hit that Find Out Now button. Fill it out. We'll get you an automated home value to get you started. Thanks for joining us right here on the Reno-Sparks Real Estate Market Update Show. We'll see you next time. Bye-bye.
Assist to sell way smarter.